The other day I came across a recent interview with the Bitcoin famous Plan B. The date when the interview got published on YouTube was on December 25, 2020. Since it's a Dutch interview and I'm from the Netherlands, I guess you would appreciate me sharing my takeaways and thoughts by listening to this interview. So Plan B is most known for his publication on Medium.com in April 2019. In that Medium article he shared his stock to flow model. He predicted a Bitcoin price of $55,000 after the third halvening in May 2020. Plan B wishes to stay anonymous and therefore not uses his real name, nor wants his face to be known on the internet. But to give a little background, he's male and in his mid-40s. In college, he studied law and economics, and already for 25 years he's working in financial jobs and currently works as an investment manager for a Dutch institutional investing organization. Without his day job, Plan B would have never come across Bitcoin, he says. Plan B explains that all the cash flow models he learned in school are not working any longer since we need to deal with negative interest rates. Plan B explains that back in the day you could retire when you had $1 million in the bank when you still received a 5% interest on it every single year. Nowadays you cannot, since we need to deal with negative interest rates. If you have $1 million in the bank, you need to pay more money instead of receiving money. Like ordinary people like you and me, institutional investors also needed to deal with this challenge of negative interest rates. The reason why Plan B felt attracted to Bitcoin in the first place was the scarcity of it. And if I'm correct, the first time Plan B read about Bitcoin was in 2013 in an article from the website zerohedge.com. The price of Bitcoin at the time was $100. The moment he read Bitcoin's white paper, it clicked. Plan B recommends you should definitely read Bitcoin's white paper if you haven't done so already. Just skip the technical stuff and the formulas and read the rest, tells Plan B. Plan B then dove into the Bitcoin rabbit hole. Meaning he read every little thing about it and started watching Antonopoulos YouTube videos. For those not familiar with Antonopoulos is a big name in the Bitcoin scene and publishes new YouTube videos regularly. He has a very high technical understanding of how Bitcoin and the blockchain works. The moment Plan B convinced himself to invest in Bitcoin, his price already skyrocketed to $1,000 by the end of 2013. He thought he missed his window of buying Bitcoin. A few months later, Plan B saw the price of Bitcoin crashing to somewhat around $100 per Bitcoin, he explains. He then compared Bitcoin to the tulip mania, which was the first large economic bubble. At the peak of the tulip mania in February 1637, some single tulip bulbs sold for more than 10 times the annual income of a skilled craftsworker. At first, Plan B was happy he didn't invest in Bitcoin. But the interest he had in Bitcoin didn't disappear. Plan B explains that he financially invested in Bitcoin around 2015 and 2016. He then started using his knowledge and experiences by creating calculations, predictions and models for Bitcoin. It's nice to invest in something, but I want to have a bigger chance of 50% that I'm right, he explains in the interview that got published on December 25, 2020. He started creating graphs and models. Plan B tried to find a correlation between Bitcoin's stock-to-flow ratio and its price. And just after the halvening happened, the stock-to-flow ratio doubled and the price went up. You can calculate the stock-to-flow ratio of Bitcoin the same as you can calculate it from gold and silver. The stock means how many is there available of it. For Bitcoin, for instance, there is 18.5 million Bitcoin as of this moment, and the flow means how many Bitcoins are added to the circulation every single year. So every 10 minutes, on average, a new block with new Bitcoin transactions is mined. Therefore, 6.25 new Bitcoin will be given to the miner. Meaning 6.25 new Bitcoin is added to the circulation of the 18.5 million already into existence. At the time Bitcoin came into existence, the block reward for the miner was 50 Bitcoins. Back then, every 10 minutes, 50 new Bitcoins got added to the circulation. In 2012, the first halvening took place and the block reward was cut in half from 50 to 25 Bitcoins per mined block. In 2016, the second halvening took place and the block reward was cut in half again from 25 to 12.5 Bitcoins per mined block. And as you probably already know, as of May 11, 2020, Bitcoin's third halvening took place and the block reward dropped from 12.5 Bitcoin per mined block to 6.25 Bitcoin per mined block. And you can easily calculate the newly added Bitcoin per year because every 10 minutes 6.25 Bitcoins are added to the circulation. First I multiply 6.25 by 6. I now know the number of newly added Bitcoin every hour. That's 37.5 Bitcoin. Then I multiply that number by 24 hours to find the number of newly added Bitcoin every single day. That's 900 Bitcoins per day currently. Then again I multiply that number by 365 to determine how much Bitcoin is added to the circulation these years. So that's 328,500 Bitcoins are added to the circulation these years. So to calculate the stock to flow ratio of Bitcoin, you then divide the number of Bitcoins into existence by the number of newly added Bitcoins every year. So that's 18.5 million divided by 328,500 and the result is 56. So 56 is the stock to flow ratio of Bitcoin currently. Before the third halvening it was 25 and before the second halvening it was 12. On Binance.com they describe the stock to flow ratio as follows. The higher the stock to flow ratio, the less new supply enters the market relative to the total supply. As such, an asset with a higher stock to flow ratio should in theory retain its value well over the long term. So what Plan B basically has done is connecting the stock to flow of Bitcoin with Bitcoin's price. He tried to find a correlation between the two, and he found it. If the model really is valid, you basically can predict where Bitcoin's price is heading. And Plan B predicted a Bitcoin price of $55,000 after the third halvening in May 2020. At the time of publishing his article, Bitcoin's price was $4,000. Plan B first published his research of this first model in March of 2019. After publishing his article, exciting discussions came up. Okay, so the important thing is there may be a correlation between the stock to flow ratio of Bitcoin between Bitcoin's price, but it doesn't mean there is a causal relationship. And this is very important to keep in mind. Search on YouTube correlation and causation. You'll find several videos that explain the difference between these two, so you get a good understanding of it. In short, it means that two events can be correlated with one another, but it does not mean one event causes the other one to occur. A famous example is the correlation between ice cream sales and homicides in New York City. The moment when ice cream sales go up, so does homicide. So does this mean ice cream is the cause of murder in New York City? Well, no, of course not, because ice cream isn't the cause of it. It's just a statistical coincidence. Of course, it's crazy to think that ice cream causes people to murder one another, right? Another example is comparing the price of Bitcoin with the world's population or the consumption of beer. You will also find a high correlation, but it doesn't mean one of those things causes the other one to occur. When two events are correlated, but when one of the events doesn't cause the other to occur, they also call this spurious relationship. So the question is whether the correlation Plan B found between Bitcoin's price and its stock to flow ratio is a spurious correlation, or is it more fundamental? The problem for us normal people who don't understand all the theory behind these models, we can't really judge their validity. Of course it's nice to see a price prediction of $55,000 for Bitcoin or even higher if you own Bitcoin. But it doesn't mean you and me have anything meaningful to add to this discussion, right? I would like to highlight the input Assistant Professor Sebastian Kripfganz gave on May 12, 2020. He has lots of experience with these models. Sebastian explains a lot of technical stuff in this video that I mostly do not understand, but his key takeaway is the following, and I'm going to let him explain it himself.
What is the key takeaway you would give us here? When I think about Sebastian at VOB 2020, what did he tell me?
Well, the key takeaway is we should always be careful drawing conclusions from correlations. We checked the hypothesis here that the stock to flow ratio may not improve the prediction for the Bitcoin price. That's not necessarily a proof that the stock to flow ratio plays no role at all. It might simply show up in the constant upward drift, but there's no way we could statistically establish that this upward drift is just driven by the stock to flow ratio or by something completely else. There's no way we can separate these potential different causes.
So the key takeaway is that we should always be careful when drawing conclusions from correlations. After Plan B publishes his first model in March 2019, he started working on his new model, the Flow X model. The new model translated into an average Bitcoin price of $288,000 after the last halving in May 2020. And according to Plan B, this is the average Bitcoin price during this halving, meaning between 2020 and 2024, the price will be lower than this, but will also be higher than this during this time. Plan B explains he doesn't second guess his model's results, but he can't deny the model he created can fail. When filming this video, I own a little more than 0.5 Bitcoin, so I would gladly see the Plan B price prediction come true. Still, I think it's best to listen to Professor Sebastian's key takeaway. Be careful from drawing conclusions from correlations. Don't blindly put all your money in Bitcoin because there is a model that tells you Bitcoin will go up and up. And I would like to end this video here. Please make sure to click the like button if you enjoyed this video. It cost lots of hours to create these videos and I would like to know if you enjoyed watching them. Also, please leave a comment below and let me know your thoughts on Plan B's models. Do you think it's best to be careful when drawing conclusions from correlations, or do you think otherwise? Please let me know in the comments. Also, make sure to subscribe to my YouTube channel. I'm publishing 2 new videos each week on Monday and Thursday. Lastly, I've added 2 videos here and here, and one of them is about me, how I started my entrepreneurial journey, and the other one is about an interview with Michael Saylor about Bitcoin. Also, if you're interested, please check out my other videos and you can find them in the description below. Hopefully, until next time. See you later.